Yeah. Hello, fellow traders. Tis I, TheRumpledOne, coming to you on Thursday, November the 2nd, the year's 2022. Let's talk trading. Trading with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. So, fellow traders, got a little treat for you. I got Walmal to send me his trading template so you can see what he looks at when he trades. Walmal, you want to explain this mess?
Well, I was expecting you to go and to slap me around a little bit first, but because we always say keep it simple, stupid, right? And I got a bunch of things on here that I actually don't use, and the things that I don't use for the most part are a lot of the multimeters over on the right hand side on the top. I don't use any of them with the exception of the one that's labeled EMA 5 close, and that's basically what that is. It's just an indicator just telling me how far we're away from the EMA 5 on each time frame. I don't look at any of the other ones that are over there. The main reason why they're up there is because Tira will go and send me a new indicator he's worked on or whatever, and just to go and look at it, and I'll put it on the chart, and then of course, I forget to go and take it back off after we know that it's working properly. And so what happens is I just leave them on there until eventually it gets so filled up with crap. Excuse my language, but it's so filled up with crap that I go and actually go and delete them all off of there again. And what I should really do is put that on a separate chart so that all those things are on a separate chart and not in the middle of my trading chart. But they don't bother me. I don't even look over there. I know exactly where the EMA 5 is, so I can find it instantaneous. It's not a problem. I do use the smart range underneath that, which is the M1 range from close to open. I like to go and see, where we're at, how big those candles are. And if you notice, I have it filtered from 1300 to 1800, and that's just based on what my server times are. And that way I'm only looking at relevant candle sizes for the times that I'm actually trading. The reality is there are candle sizes that are really, really tiny at times when I'm not trading. And so why do I want to have my data skewed by that? So I have it filtered out based on that idea. And again, because it's M1 candles, I only go back 100 candles on it. I see no need to go more than 100 candles. 101 minute candles, what does it get you? An hour and 40 minutes or something like that, and so that's the most relevant thing, because I don't care about what happened yesterday. I care about what's happening today. And so that's why I only go back that far. And then below that, I got the M5 range. But here it's not closed to open. I'm actually looking at it from high to low. And that's just giving me an indication of, okay, are we having really, really big M5 candles? And if you notice right now, so the current candle is 19, okay, and the previous one was 16. One before that was 6, and and 12 and 9. And if you notice, all of our candles, with the exception of one of them, were in the 90 percentile or greater. So what does that tell you? It tells you that these M5 candles are very large. I'm going back 240 candles on it. So now I'm going back, a day's worth of data, basically. And so I'm getting an understanding what's going on today. What is it telling me? It's telling me that we're having pretty large candles.
No, actually, 240 is only about 4 hours worth, isn't it?
So good. Yeah, that's what I mean by a day's worth of data, because my day is only 3 hours old right now. So that's why I'm saying it's a day's worth of data. It's my day, not the trading day, but my day. That's all I care about. I just want to go back 3-4 hours. I don't care about when I first sit down at the computer, okay, and I start trading. Let's say it's 7 o'clock in the morning. If you go back 3-4 hours at that point in time, we're basically looking at the open of the London session, because I'm starting basically an hour before the open of the New York session. And right now, where we've been about 2 hours in, or or 3 hours in, depending on how you time it on the New York session. What I'm looking at is basically, the overlap of New York and London, because London will be closing down in about an hour or so. And so I'm just looking at basically what has happened during the overlap. And because I was trading earlier, I know what was happening during just the pure London. So I have a pretty good indication. So that's what I mean by going back a day's worth of data. I don't mean a physical 24-hour. I mean a trading day, my trading day, and what's important to me.
Yeah. Speaking of trading, I was going to say I missed my 22 short again because I was working on getting ready for this video. It's like, dang it.
Yeah. And we've been in a nice little trading range here from, I was saying to TRO before, nice little trading range here from about 05 up to about 25. And it's looks like it broke and got all the way down to the 00. Didn't quite get there, but got pretty close. But it's been pretty nice because you've just been able to ride it from one end of the range to the other end of the range. And, I don't go and take that full run. I only take, a few pips at a time, as most of y'all know. But it's just been really nice to go and see that, see boundaries like that. The only thing that's been bad for me today is that I've been having crazy spreads and, really bad fills and really bad exits. And, I've been sitting here sometimes where I'm expecting to get out with a 4 or 5 pip, profit, and then getting, when I press the exit button, I'm only getting 2 pips of the 4 or 5 and have no clue as to why. Did price technically get there? Yeah, it got there. I can't argue. But at the same time, it's sort of like, why is it happening over and over again? But at the same time, which is kind of funny, is that, it seems to happen the other way around too. There have been a couple of times where I picked up an extra 2 or 3 pips. Like there was one time I picked up 4 pips. So I guess I got no right to complain other than the fact that, you stole money from me.
Well, it's like, didn't we do a video where you said you had tracked it for the last 100 trades or something?
Yeah. I don't know if we did it on the video, but I do know that I went and told you. And I guess it bears repeating, but I went back 100 days, not 100 trades, but 100 days. And in those 100 days, what I found was that 3.2 times, I got right in front of me, 3.2 times a day, where I got out and where I expected to get out was either below or above. So basically, on a 320 trades, what happened was I either got shorted or it got extended. And when I added it all up, okay, and did the simple arithmetic on it, what happened was they cheated me out of a grand total of 0.067 pips, or in other words, 0.6 of 6/100ths rather of a pip. I mean, and I think that's what happens. We remember when we get stolen from. We don't remember when they gave us. We're not very gracious people, I guess. But and the thing is, I think that it's the reality is more times than not when we're having when we take a losing trade, the reality is we gotta own ourselves up a little bit here and just say the reality is, what, we screwed up more times than not, or the market just didn't do what you expected the market to do. Own it. It just, I think if we start owning things, we'll all be a little bit happier, or at least be in a situation where we can say, hey, the market's not doing what I'm doing, expecting it to do. Why is that? Is there something I'm doing wrong? Am I not looking at things correctly? Or is it, is it something else going on? Now, at the same time, if you do have a broker, because there are dirty, I've experienced it, and I'm sure TRO, you can tell stories too. I've had to deal with dirty brokers, and I won't name any here, but I've had to deal with them, and they literally were stealing. Luckily, the one that I basically had a big problem with, they're no longer in business, and I think that's what happens eventually. People get enough, of being cheated, and word gets out there, this is a dirty broker, stay away from, and they lose their entire customer base. So it's sort of like, yeah, look at that, you were penny wise but pound foolish. You lost your entire customer base because you were playing around. And I think that's what happens over time anyway. I mean, let's face it, it is a competitive market, and there are a lot of brokers out there. And what will happen is, if word gets around, that hey, these people just aren't treating me right. And if we look right now on the charts, we just broke the double O. So I know you've been calling this all day, Euro, that it's going to go and run down. And I think your rundown is really starting to happen right now.
Yeah, let's just, just looking at the charts, but, I am sitting here kicking myself for not getting the 22.22 short this last time. It's like, dang it.
Yeah, well, guess what?
It's like like not shorting the dollar yen at 151. I'm a little upset with that one too. It's like, geez, because I'd even brought it up, like doing a couple of videos, because like, hey, look where the yen is. It's like, man.
Yeah.
And I'll probably be kicking myself for not shorting 150 when it's down to 148.
Well, that's and that's the thing, our best friend Harry goes and points that out to us every day. And for the reference for people who may not know, I'm talking about Harry Hindsight.
Oh yeah.
It's so easy to, look. When you look at the charts after the day is over, why did I do that? Why didn't I do that? It's so obvious. But when you're I was talking to a trader the other day, and I was just saying, when you're in the middle of a trade, first of all, you're so hyper focused on certain things, a lot of times you don't see everything that's going on the charts. And additionally, what will happen is that, you're sitting out there and it's happening dynamically. It's so easy to look at things when things aren't moving around.
Right.
When things are moving dynamically, it'll mess you up pretty bad.
Yeah. Well, that's why I like to, when I start out, I'll look at the H4 pivot chart just to see if there's any missed pivots. And if there are, that's one of my favorite plays. And so,
right.
Right here, we had this missed pivot from a couple of days ago. And it was sitting, at 20, on this broker it's 22.21. On the other one it was 22.22, but, close enough. Point is, that was a missed H4 pivot, and its price was above the open, the daily open. It's like, you know what? That's where I'm going to sit, and I'm just going to wait and short there. I was just waiting for it, and then I didn't do it.
And that's the other thing that happens too, is the fact that, we can set alarms, we can do all these, great things, but what will happen is that, we miss things. So we wait, and then all of a sudden something happens and we don't know what to do, because we miss it or whatever.
So, and I think there was another target up around 122.45, which was I think it was R3, or was it R2 on the pivot chart? Yeah, 122.46. That was R3. So when price jumped up to the 120, I think it actually hit 125 on my other broker. I was thinking, okay, from the 25, it either wants to be 50 or double O. And I was thinking, well, I might do a nice fib extension up there. So I probably second guessed myself. Plus Bambino Flex Indicator was saying to go long, but we had a short call near the pivot, or rather near R1, which the first time it hit it, it did that. But you can see it's bounced since then. But anyway, fellow traders, the fastest 15 minutes in trading is over. Glad Walmal sent us that template, so now when we're doing these trading with Walmals, you can see what he was seeing. It might help you. But always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.